Well, good morning, everyone. We're very good morning to the West Coast, I should say. Good afternoon to the East and everybody in between. We're very happy to have the opportunity to spend some time with you in these stressful and unusual conditions. As a result of that, we are a very proactive organization. You'll find out a little bit more about that today. And we're happy to be able to spend a few minutes of your day giving you some ideas and concepts that can help you keep your business thriving and solve some issues for your clients. My name is Brad Uthridge. I'm the Chief Marketing Officer of the Center for Tax Strategies and Resources. We've got a little over an hour, may go a little bit past that based on the questions that you ask. We certainly will give you an opportunity to give some feedback and ask questions along the way, and you'll be able to see where that option is on the side of your screen. For those of you that aren't real familiar with how this works in regards to the screen share, you can move those pictures up and down. In fact, there's a little line that runs along the bottom of the pictures. If you drag that up to the top of your screen, it'll make us smaller and make your screen larger. If you're having an issue, go ahead and jump on that little box on the right and let us know what the issue is, and we'll try to electronically help you along the way. Today, we're going to give you a couple of ideas. We're going to get you caught up on some things that we know your clients are asking about today, and it's confusing, so we brought an expert along. I'm going to ask Simon in a minute to introduce one of our speakers. We're going to tell you a little information about our group, the Center for Tax Strategies and Resources, and again, leave some time at the end for questions that you may have. I have the honor of introducing Simon Sanger, the founder of our Center for Tax Strategies and Resources. For those of you that don't know Simon, he is the founder also of the Advisor Consulting Group. He's been in our industry successfully since 1966. So he's definitely seen a lot of things that are affecting us today happen before. Though this is unprecedented, there are ways around these issues. Simon has written 3 business bestsellers, including the 21st Century Wealth Counseling, Getting to the Heart of the Matter. He's a very sought-after speaker, so we're very happy that he has the time to be with us here today. I'm kind of chuckling when I say that because we all have time to be here today and to figure out how to make that work for him. He's also a member of the Financial Planners Association, Advisors in Philanthropy, and is the past president of the International Forum. And by the way, also a recipient of the National Humanitarian Award, which is pretty amazing. With that, I'm going to turn this over to Simon and go ahead and take control, Simon.
Thank you, Bradley. And I was going to say thanks for everybody taking time out of their busy days, but then I caught myself and I realized the days aren't so busy. I think I've set a world record for naps during a 24-hour period. And if anybody wants any information about how to do that later on, we can talk about that. We've got 2 subjects today. The first one, we've been inundated with information about COVID-19 and how to file for various grants or loans. And we thought it might be a good idea if we had an expert on that subject kind of bring us into the stuff in between the lines as opposed to just the stuff on the lines, and to give some time to have you ask general questions, not specifics to your particular situation, but general stuff that might be of use to everybody. And then we're going to go to the tax reduction plans that the Center for Tax Strategies and Resources have created a relationship with a couple of the premier tax strategists in the country. And I think that will be an interesting conversation because saving money on taxes for small business, remember about 50% of them are still open. Saving money on taxes is still an issue that people are going to be very interested in, even in these very unusual times. So one of the speakers on that subject is going to be the gentleman that's going to help us with COVID-19, and that's a CPA with a national practice by the name of Anthony Amator. Anthony, would you take over for us, please?
Sure. Thank you, Simon. We have a lot of information. The stimulus bill that was passed by the federal government, most you know, is 900 pages long. I've had the misfortune of trying to read all 900 pages. What we tried to do today, though, was to boil it down to some high-level basics because there's a lot of things floating around, questions floating around, people saying, well, my banker said this, my priest said this, my bartender said this, and you want to try to lock into what really is true. So today we wanted to give you a high-level approach to what we've seen. I've spent every day answering questions in my own practice, which I've had for quite a while now. People wanting to know, how do I file for unemployment? How do I qualify for the stimulus money? When am I getting my stimulus money from the IRS? And on and on and on and on. So we've developed a little bit of a system. And today what we're going to do is we're going to cover some of the highlights so that everybody on the call can kind of take a look at what's out there. And we'll be very candid with you. The government, irrespective of your political preference, has entrusted the IRS and the SBA into being the delivery agents for this money. I don't know if that's going to be good or bad, but we're going to find out. I think we have a slide deck that we can pull up this morning, and Simon's there, front and center, and the slide deck is kind of looking weird there.
Yeah, I don't want anybody to get the idea that I'm the one that's giving the stimulus package, because
It's the weird world in which we live right now. So just
There
bear
we
with.
go. Yes, expect the unexpected.
There we go.
There we go. One of the first things that's been popping up with a lot of people, especially our clients, has been, hey, I got laid off. The restaurant shut down with this COVID-19 stuff. We have a restaurant in our complex. 20 people got let go. 15 of them were standing in our lobby the other day. How do I file for unemployment? Well, there's two ways. There's regular unemployment, and in the state I'm in, and I don't want to dog the state too much, but they've got a long way to go to get up to speed. Unemployment claims in my state are averaging 18 to 24 days before anyone's seeing money, and that's just on the state side. Regular unemployment, there's supposed to also be a federal add-on at $600 a week for 4 months from the federal government. We have not seen that in my state. If you have, let us know. We'd like to be a resource about which banks are playing ball and which states are playing ball with the small business community. If you're working from home, this is one of the things that's tripping a lot of people up. Well, my boss said I can go work from home. You're still working, so you don't qualify for unemployment. If you got your hours cut, you got to check out your unemployment laws for your state. Go on your state unemployment website. They should have a lot of information on what qualifies you and what doesn't. On the federal side, if you're working part-time, you still qualify for unemployment if you've been displaced by COVID-19. So these are things that you want to keep in mind. We tell our clients, if you're not sure, apply. That's because you may get some right answers from the state, you may get some wrong answers from the state, but you'll be in the quay. Keep in mind this. These benefits are taxable and could disqualify you from other programs. So just keep these things in mind. First thing you want to do if you're an employee, try to see if you can get the regular unemployment. The federal should kick in. We don't know when, but you've got to come up with a way to take care of your family, especially if you're not working. That being said, we can bump over to the next slide. There we go. Well, we must have pulled out the pandemic one. There is the pandemic unemployment, which is the federal portion, and we did talk about that. So that's one of the first things you want to take a look at. Hey, am I eligible for unemployment? This next series of slides, though, they cover more of the small business community, and what you've got is on this one, it's PUA is Pandemic Unemployment Assistance. I don't know why we didn't spell it out, but that's my bad. And it goes through just a series of guidelines. The bottom line is, this COVID-19 has been affecting everybody. Chances of you not qualifying are slim to none. But if you read down through these, part of the Pandemic Unemployment Act for unemployment, which is the federal unemployment kick-in, is if a member of your household has been diagnosed with COVID-19, if you have to stop working because you have to take care of a child because they can't attend school because of COVID-19. You're eligible for the pandemic unemployment. If your doctor says, well, we don't know if you got it, but you better self-quarantine, you're eligible. And if you read down through these points, if you become the breadwinner for the household because your immediate head of household has died because of COVID-19, you're eligible. If your place of employment has closed. And then the last one I thought it's interesting. If you meet the criteria established by the Secretary of Labor, the Secretary of Labor is saying, listen, if you have any occurrences that is causing you not to be able to work because of this, especially in our state where you're not supposed to be out unless you're an exempt industry, you're going to qualify for the federal phase of the unemployment. It's supposed to piggyback in with the state of Ohio or the state of Nevada or state of California or the state of Michigan. These are just a few of the states that I'm throwing out there, but the federal unemployment should piggyback in with the state unemployment. Our state hasn't seen that yet, but we're hopeful. So that's a little bit about the unemployment portion of things. So we can go to the next slide.
So Tony, can I ask you a question?
Yeah.
We had a woman contact us who was working in retail sales at a major department store, and she went all the way through the filling out of these forms, the first 3 sections. When it got to the 4th section, it wanted to know what her job title was. So she went to the section that gave the various job titles that she might include. To date, she's included all of them, and none of them seem to be acceptable for a job title. My guess is that's a glitch in the system, but she's very frustrated. Actually, so were we, because we went through it and helped her try to fill it out as well.
Right.
What's your experience, if any, with that?
It's like that all over the place, even in our state. You know, I had a client come in and he basically got laid off from a company that digs septic tanks. We couldn't find anything even close. So we had to go into just basically a general category and try to come up with something as close as we possibly could, even though we know it wasn't right. Getting something in there, even if it's not 100% correct, is better than stopping the app, obviously.
Yeah. Okay. Thank you.
Yeah. Good is good enough, I guess, in this case. Eventually, you're going to need, with this pandemic unemployment, you're going to need 1099s, all your other stuff that they may ask you for. We have a lot of people who, and I'm sure you guys see this every day, in industries that pay under the table. We have a couple of those industries, and these people are stuck. You know, they're not going to be eligible, and that's unfortunate. But we have a gentleman whose mother owned a business establishment. I'm not going to go into the type of business establishment, but worked for his mom for years. She paid him cash for years. He not only can he not apply for unemployment, he's now 65. He went to apply for Social Security. He has no benefits. And so there's a valuable lesson on, that, you know, the end of the table industry is out there, but is that the best place you want to be? Illegal aliens, and this is another bone of contention. We have a lady that's an illegal alien. She's been here forever, and she worked for a company, and she went to apply, and guess what? They kicked the app. They said, sorry. So you're going to run into glitches in the system. The best advice I can give you there is what we call PPA, persistence, or PPO, persistence pays off. So you just have to keep going back and pushing to try to get the benefits that you're entitled to.
Tony, what about independent contractors?
Well, in our state, independent contractors are eligible for unemployment. But when you go on to fill out the application, they give you 0 benefits for the week that you qualify for, and 0 benefits for each week after that until the federal pandemic unemployment kicks in. When that kicks in, as you'll see with this slide, you should get $600 a week minimum. And so that is the guidelines we've currently got.
So what about for the employer that is hiring independent contractors, deducting them but not taking out payroll taxes?
Oh, we're going to get into that. Yeah.
Okay, thank you.
We're going to get into that because that's another area that the rule has changed in the last week 4 times, and it's getting frustrating. So that's a good point, Simon, and we'll get to that. But this the pandemic unemployment, you should get $600 a week. It's not considered income for Medicare or CHIP, which is a good thing, because if you're on the bubble and you can get Medicare or CHIP benefits, it's kind of helpful because it doesn't disqualify you on something like that. Okay, so we can go to the next slide. I'm thinking that's going to cover most of the unemployment side, and that's going to be, you know, and this next slide will give you a little bit of a recap of, and this is what the federal guidelines are saying, but if you call the state, they don't have any information on this. This is what frustrates people. The pandemic unemployment assistance applies to self-employed people, independent contractors, freelancers, gig workers, workers seeking part-time work, and workers who don't have enough history to qualify for the state benefits. If you're eligible for regular state unemployment, this slide needs corrected. You're still eligible for PUC. It's not going to knock you out, so that's a typo. 39 weeks. So you'll get federal of 600. So what is that, about 24,000 roughly? And 1/2 the state average unemployment benefits. And could you make more on unemployment than you could with your regular job? Yeah, we've done the math. They're going to run this thing to the end of the year, and they've made it retroactive back to January. So it's going to be one of those things where, you know, you got to wait and see. I mean, our biggest concern is that if the federal doesn't kick into our state until May, June, they're going to be a little late to the dance. And that's something, it's a big worry right now with everybody. The minimum benefit is equal to 1/2 the state's average, about 190 a week plus the 600. So these are just rough calculations. Regular unemployment in my state is 26 weeks, but the pandemic is adding 13 weeks, so you get 39 weeks. These 26 weeks, you don't have to look for work, but the 13 on top of that, so week 27 to 39, you got to look for work. There is an exception with each state. Work requirements, if you're unable to search for work because of COVID-19 or illness or restrictions, you have an out there with that also. And that kind of gives you the recap on the unemployment. The best advice I can give you there, if you're not sure if you qualify, go on and apply. And if you get denied, appeal it, because we've already appealed 2 of them because of you know, the fact that our state is so antiquated and hasn't updated the app for the federal pandemic yet. This next section, though, is what we get most of our phone calls about. My admin gets 10 phone calls a day on this. Hey, when's my stimulus money coming? I saw that guy on TV with the glasses the other day that said we were getting stimulus money. Well, yes, that's what they're telling us. And what it boils down to is they're going to give you less, and this is where the rules get a little funky, and they're gonna change these from what we're being told. This is the lesser of net income tax for $1,200. If your net income tax was 0, you could be knocked out of this, and they're going to change that because they want money in your hands. So if it's just you, look for a $1,200 stimulus check. If you're married filing jointly, look for a $2,400 stimulus check. If you've made too much money, this next line is important. That stimulus money is going to be reduced by $5 for every $100 of your AGI that's over either 75,000 or 150, and it's going to phase out. As you can see, once you hit 99,000 or 198, it's going to phase out. You will not get it if you're a non-resident alien, and I have a lot of college kids saying, well, how do I get my stimulus money? Well, talk to mom and dad, because if you're dependent on their return, you're not getting it. They're going to get it. It is based upon the 19 tax returns. However, the government has finally got smart and realized, well, if everyone's at home, how are these returns getting done? So they're going to look at your 18 if your 19 hasn't been filed yet. Most of our clients do direct deposit, and that's how they're going to push this money out. If you are not on direct deposit, we have clients that don't do direct deposit because they're not comfortable with that and have moved. You need to fill out a form 8822 because they will also mail checks out. First round is going to go direct deposit, then they're going to hit the people with checks. So if you've moved, make sure your clients fill out the 8822. It's really, really important. Also, one of the things the slide didn't mention is you get $500 for each dependent child you have on your tax return. The latest information that we have from the Secretary of the Treasury, Steve Munchton, is April 17th is supposed to be when these things start appearing. What we're telling our clients is, you know what? When you get yours, call us, because right now we don't. That's the only information we have is what we see on the news channels. That's it. So that's really, really important. The IRS, as of 11:45 this morning, does have a portal up. I just checked it. That if you don't have direct deposit, and let's say that you've paid tax all these years, but you are eligible for money, they now have a site up, irs.gov. You can go to and you can put your information in so that you can still get your stimulus money. So let's say you're self-employed, you always made estimated payments, they don't have direct deposits on your tax returns. The IRS, as of 11:45 this morning, does have a portal. If you go to irs.gov and put in COVID-19 stimulus money, you'll find the site, and they're going to ask you a couple questions, name, address, social security number. Do you have an ID? Can you share the ID with us? Can you give us your bank information? That kind of stuff. That went up this morning, so that's some of the good news. So the first two portions that we've talked about covered unemployment and covered the stimulus money. This next area that we're going to cover deals with the small business community, and this is where it gets interesting. The government has made two stimulus programs available. Actually, it's the Payroll Protection Act and the Economic Injury Disaster Loan Act. And I think if we snuck it in at the end, there should be a website, the SBA's website you can go to, and it'll say which one do you want to pick, and you can go and do your apps. Now, the Economic Injury Disaster Loan is a direct online submission to the SBA. The other one you have to go through one of your banks, and we'll talk about that in a little bit. But this first one is the Payroll Protection Program. It's the SBA. It's actually SBA 7A loan, and it can be. I shouldn't say including. It can be forgivable. Their goal here is to retain your workers, keep them working, pay some utilities, some rent, mortgage. There's no fees. They're covering from February 15th to June 30th. It covers any business concern. However, when you go to fill out the app, it's going to ask you a few questions that could disqualify you. And if you have questions about that later, let me know and we'll tell you what those are. It has included nonprofits also, which is a good thing. The most important thing that I make sure everyone understands is what they're trying to do is give you 8 weeks of payroll money. So you have to, and you have to go through a bank for this. You cannot go direct on this. And we're getting a lot of frustrated people because they're saying, well, you know what? I called my bank and they said, we don't have this information yet, but when we get ready, we'll call you. Other banks, Bank of America has already processed, I think 28,000 apps. It goes to show you some of these banks are on top of this, others are not. As we move forward, if you folks can share your successes or failures or frustrations with your banks, we'd like to create a little cheat sheet on which banks are stepping up and which banks aren't. I think it would be very helpful. I belong to another group of about 1,000 people, and that's what we're doing. We're collecting a database on, okay, who's playing ball and who's not. It's really, really important. But you do have to show your bank that you had payroll, and it includes payments also at independent contractors. Now, here's something that we ran into though with this thing. This is a 2-year loan. Started out as a 30-year loan, 0.5% interest. They've now scaled it down in the last couple of days to a 2-year loan, 1% interest. The good thing is it's non-recourse and you don't need collateral. And if you handle it right, it's forgivable. I'll share you real quick what happened with our local bank when I went on to apply, because I wanted to see how this damn thing worked. I went through their portal, got in, and the first thing they asked me was, have you ever been convicted of a felony? Yes, sorry, you don't qualify. Do you owe the IRS money? Do you have tax liens? Yes, you don't qualify. Have you ever defaulted on an SBA loan? Yes, you don't qualify. These are some of the questions they started hitting me with before I even got to the app. So that's one of the things that you've got to be aware of. The other thing is, this is my bank. I have business loans with them, and that's the only reason I got into their portals, because they already have an existing relationship with me. If you don't have an existing relationship with these banks, they're not going to entertain handling your 7A app. They are going to ask for payroll. I had to basically upload my W-2s and W-3s and payroll ledgers, and then I had to do the calculation for them on what is your monthly average wage. I had to do the math for them on an Excel spreadsheet. They weren't going to do it. I had to submit my articles of LLC. I had to submit my stock certificates and my proof of ownership. I had to submit all that. So be prepared. This isn't just take my word for it. They're going to want a lot of stuff uploaded. Some banks are even asking for a profit and loss. My bank didn't for whatever reason. I guess some of these banks are tailoring their apps to their own specific purposes. I did that 10 days ago. Haven't heard a thing. So we're going to see how this thing plays out.
Tony, most of that for most of the clients is just clicking a button on their system they're using to monitor their business, right? I mean, if you're kicking out a report from QuickBooks or Peachtree, I mean, not obviously the stock certificates, but the rest of the information, including total payroll, should be pretty much a point and click, right?
Yes, absolutely. My clients get hung up on, we don't have articles of organization. We don't have LLC certificates. Where do we get those? It's like, what do you mean? So we've had to refer them back to their legal counsel or try to get them some help on that. It's not, it's not rocket science, but it is, you got to provide them with this stuff. They're not going to take your word for it. That's what it boils down to. Okay, let's bump over to the next slide. We should have some more good information on this. Here's the amount of the loan. 2.5, it's actually 2.5, it's actually 250% is the mathematical calculation we use. It's 2.5 months of payroll. Now, this next plus rent, plus interest, plus utilities, some banks are not letting you add those in. Some banks are saying, oh no, we're just doing 2.5 months of payroll. Because when I called my bank on it, they said, oh no, we're just doing the payroll. We're not adding interest or utilities. So again, this is where people are getting frustrated. A lot of this information is out there in the public domain, and when you get to your bank, they're saying, well, nope, here's our rules on this thing. Payroll is broadly defined under this 900-page act to include payments to independent contractors. You know what my bank said? Nope, if you're paying independent contractors, we're not gonna consider those. So again, a lot of this is gonna get down to who you're dealing with on this as far as the bank goes. And we use subs, so it does have an impact on things. I've told my bank, I said, I'm gonna send it over, and I'd really hope you'd consider it, think it over, because what I'm reading tells me different than what you guys have set up. So they were kind enough to at least say, okay, we'll look into it.
But Tony, you've got loan is 2.5 months of payroll plus rent plus interest plus utilities up to $10,000 a month. I mean, if you've got, you could have 5 people at $2,000 apiece, or you could have 10 people at $2,000 apiece and you're at 20. I'm not sure what that $10,000, does that mean, is that 10 million?
Yeah, that should say up to a cap of 10 million. That's our
Okay.
fault on the slide.
Thank you.
Annual salaries of over 100,000 are excluded. That doesn't mean you're automatically kicked out. It's just that it's a union cap at that point.
Yeah.
Okay, let's take a look at the next. Here are some of the basics. You don't have to. You do not have to prove the inability to get credit elsewhere. And this is where people are getting frustrated. I think, Simon, you mentioned that one bank was reluctant because they've never borrowed. Well, under this Payroll Protection Act, you're not supposed to use that as a determination. You need to show that you've been affected by COVID-19. That's not difficult. Payments are deferred for 6 to 12 months. That is true. There's no prepayment penalty. And the not eligible for an economic injury disaster SBA loan once you receive the Pay Protection Act loan has been modified to, they're not going to kick you out. They're going to take a look at what you got under the economic injury disaster loan, and they're going to say, okay, you can't double dip. If you got payroll factored in that one, you got to take it out. We're not going to pay you twice for the same loss. So that's something that they finally started to clear up the rules on a little bit. Just so everyone knows, these rules are still evolving, and we're told they're going to continue to evolve. But they're also telling us if you applied yesterday and the rules were this, those are the rules. And if you're, and we're going to live by those rules. If the rules changed, well, that's okay. You've already qualified, so we're going to grandfather you. So it's like a stay tuned thing. I mean, I get updates every other day. This has changed, that's changed. This is adjusted, that's changed. And it does get frustrating. There is also a payroll tax employee retention credit, which we can get into at another time. It is like a loan from the federal government because you can get retention credits for keeping your people on, but that literally is a topic for another time when you do your second quarter 941s. There is a way to get money from the federal government through a tax credit off your 941. Contractors do not count in payroll for PPP. SBA changed the rule to avoid double applications. That is true. Now this part they're looking at now, if you're a sole proprietor and you have no employees, you may still qualify. Presently scheduled to start April 10th. Well, guess what? Today's April 10th. You know what I've heard from my bank? Not a damn thing. So again, it's one of those stay tuned things. If you qualify as a sole proprietor for a second round of money, your contractors still wouldn't count because they are not considered employees. But what they're telling us is no W-2s, no PPP. That is true. There are a few banks that are considering the independent contractors, but we haven't seen anybody yet that says, hey, I got money from independent contractors. So we may see this change. We'll keep you posted, but right now all they're trying to do is cover people on payroll. Okay. Some of this stuff gets technical and in the weeds, but when you read 900 pages and you try to boil it down, we try to do the best we could. This use of funds is super, super important. The actual rule is if you pay 75% of that PPP money for payroll or commissions, they're going to forgive it. And then you can pay the other 25% for group health care, lease payments, utilities. Interest on any debt obligations that were incurred before the cover period is also true. Here's what we've been telling our clients, because around September, October, if you want a job auditing SBA loans, you'll probably be able to get one pretty easily because they're going to be hiring a lot of people to check and verify these loans. In the old days, you know, when you did regular SBA loans, if they wanted to audit you, they could come in and do it. They know how to do it. They have the resources to do it. We've been telling our clients, set up a separate bank account. If you get the PPA money, deposit it into a separate bank account, and then pay those particular expenses out of that fund. Keep in mind, and this is one of the things that was brought home in this 900-page document, do not lie, cheat, or steal or commit fraud. This is a federal loan. They can put you in jail because it would be considered a federal crime. Don't think because it's white collar paperwork that they won't. They take this stuff very, very serious. So when in doubt, do the right thing. If you're not eligible, don't apply. If you're eligible for certain things, apply. But at the end of the day, don't cheat. Don't lie, cheat, or steal on this thing, because the government, we don't know how heavy-handed they're going to get in the audits, but why cross over the line and worry about it if you don't have to? The biggest thing on this loan is the forgiveness. That's the big draw. If you commit to keeping the same number of full-time employees, which let's say you got 5, and you can keep those 5, chances are you're going to get your loan forgiven by 100%. If you cut hours or cut people, it's going to interfere with the forgiveness. They have a formula already. Forgiveness is reduced in proportion to the full-time employees cut, or if any wages are reduced by 25%. They do have a grace period through June 30th to restore laid off people and wage cuts, which means if you've laid people off and cut them, you've got until June 30th to bring them back and try to get them back in gear once you get your hands on this money, which the biggest thing on this is the forgiveness. These are the areas, the payroll areas, as you can see. Salaries, wages, vacation, parental, family, medical, or sick leave, health benefits, retirement, tips, not sick leave or family leave. If you have mortgage interest, if you have rent, and if you have utilities. And they're going to want to, hang on to your documentation, because if they check, you want to have it, because, it'd be nice to be able to have this thing forgiven at the end of the term. Okay. And I know we're jumping into a lot of detail, but these are things that we've found that we run into. You get to self-certify up front initially. Basically, you're saying that is, the uncertainty of the economic conditions makes it necessary with this loan request. You don't have an application pending anywhere else, because you can't go to Bank A and get one, and Bank B and get one, and Bank C and get one. They would get a little upset about that. But you're self-certifying up front that this is the information, this is what you're using it for, and this is why you're using it. On the back end, it's going to be a different story. And this program is running through the end of the year. So it's a good thing. All right, next slide. When you do the application, you do have to submit documents verifying your number of full-time employees and their pay rates, as Brad said. Go to your QuickBooks, go to whatever payroll program you're using, call your CPA, call your bookkeeper and say, hey, I need this stuff. And my bank wanted W-2s and W-3s. That's all they care about. And they wanted the payroll register, which, Brad, you're right, it took us 2 minutes to run through QuickBooks. They didn't ask us for the state or the unemployment or anything like that. They may ask for mortgage payments, utility payments, lease payments. My bank didn't ask me for any of that because they didn't consider that. They only wanted payroll, period. And you will, at the end of the application, certify that this little box that says, I document that this information is true or correct. And the information we're using this for was used to retain employees and do all this other stuff. There was a checkbox on my application. And they do have a caveat. If you saw that last line, it says the lender has 60 days to make a decision. Well, hell, by then I don't need the money. We're hoping they do it quicker than that, but we'll see. So.
You hope in 60 days you don't need
I hope and pray in 60 days. You're right. Because it just, the small business community is real ticked off right now over how this has been handled, and I can't blame them. I mean, you know, we've helped a lot of people with a lot of apps in this last week, and their question to me is, do you really think we're going to get this money? Well, they said, yeah. Well, how long do you think it's going to take? I don't know. And that, you know, those are the concerns. You know, are they really going to deliver? And when are we going to get our money? Because that's when you watch these guys, you know, I call them the talking heads. When they get out there on TV, they say all these great things, but we're not seeing it yet. And that's frustrating everybody. So we're hoping that starts to change. This next stimulus, for lack of a better term, stimulus money is it's called EIDL or whatever. I call it EIDL. It's the Economic Injury Disaster Loan. This is the companion piece of the PPA. The nice thing about this is that you don't talk about payroll. Here's what you talk about. You got someone, and we have a client who was commiserating with us, with Matt and I a couple weeks ago. I collect, you know, $100,000 in rents a month. Well, no one's paying me, and my governor of my state says I cannot, you know, initiate, you know, legal proceedings to get them out of there. So what do? Well, this program is tailor-made for that client. It's the Economic Injury Disaster Loan. There's a link there, and if you go on there, guess what? It'll take you right to the page. And the reason I would go right to the page is because I went on and did one, and obviously we haven't been affected as badly as other people. Obviously, we're in a required industry, but the bottom line is this: the application's a page and a half long, and took me about 5 minutes to fill out, and then something very interesting at the end. Would you like to apply for the $10,000 grant up front? And I clicked yes, and then they said, okay, give us your bank information. And I'm thinking, okay, if they're asking for my bank information, they must be serious. This is a direct to SBA online. That link should work. You can borrow up to $2 million. But they don't even ask you how much money you want up front. They just get all your information and ask you if you want the grant money, because here's what we found out. If you apply and don't get accepted, you keep the $10,000 grant money. Now, I have never in all my years of experience with SBA run into a fact where you're going to apply for this, and if you don't qualify, you keep the 10 grand. This is a first. So it's going to be quite interesting. It is a 3.75% loan interest rate. It's a 30-year loan term. Those terms can change. We haven't seen them bounce yet, but we're assuming they will. For our clients that own rental properties, there is a line item for lost rents. How much have you, or do you think you're going to lose under this thing? It's very important. This next line, if you receive EIDL, you cannot get PPP. That is now wrong. So scratch that. There's no personal guarantee or collateral if loan is under 200,000. They can look at credit. They don't have to. They may look at your 19 return. They're not required to. It's covered from January 31st to December 31st. We use this for landlords and for clients whose businesses are shut down because they have no income. And this is where you back up, and if your sole proprietors cannot qualify for the PPA, take them over the EIDL loan, because if they've lost money, this is where they're going to pick it up. The fellow that I have that owns the septic tank company, this is exactly where we took him because he shut down. He can't even go out and work. So this is a good loan to have. We've got people now waiting 2 weeks that have not gotten anything. But you got to apply and get in the quay, because you will get a loan number. I had one here, and I don't even know if you can see it, but after you're done, you will get something like this. It says, there's your loan number, 3,300,000, yada, yada, your application number is. So that tells you, where you're going to be in the quay. All you can do is apply and see what happens.
Tony, we've got one of the people on the phone here or on the webinar that said my local bank sent me the forms. I completed them and they put the money in my account overnight. That was from Don. Thanks for sharing that, Don. So, I mean, I think it's got a lot to do with how tight your bank is and how on top of it they are. As far
Yes.
as
Tony, what does the neighborhood do where the guy with the septic tank business shut down?
He's going to do an EDIL loan. We've already done an EDIL loan for him. Also, Don, God bless you, if you could share the bank you're dealing with. Chances are, if you got them that fast, the bank has advanced the money and then they'll get the money out of SBA.
oh, yeah, that makes sense.
We were told that the money's supposed to come from SBA and the banks are servicers. Initially, there wasn't a lot of bankers jumping on because they said, well, we have to service this and we're getting a quarter or to a half a point. That's not going to fly. We're not doing this. So the Secretary of Treasury came in and said, fine, we'll give you 5% upfront as a processing fee for these loans. Now the banks are finally saying, okay, we'll jump in. So that is, Don, that's fantastic news. You know, if you wouldn't mind sharing that, you probably have a great relationship with your bank, and I'm sure they've stepped up, and we're hoping that the rest of the banks do the same thing. So great, great. All right, next slide.
Tony, thank you. That's it's informative, but it also adds additional levels of complexity that I don't know about anybody else, but I never realized existed. But at least there's some light at the end of the tunnel. Tony, what we're going to do is hopefully people will write into us what the questions are, because I see some hands raised.
Yeah.
Because I don't want, and we'll pass them along to you, and then we'll pass them back to the folks if that'd be okay.
Absolutely, because what I want to do is I want to cover the rest of the EIDL, and then most of it's the tax changes, and you know we can even opt out of some of the tax changes if we need to for questions and answers, because we can always, we can always tackle the tax changes. You know.
Yeah, and there are some pretty good specific questions. So I think what we'll do is we'll put together an announcement when this is over, address the questions, and Tony, you can just reply to those. We'll send it back to the folks that were on the webinar.
Sure, absolutely. And the one thing I wanted to allude to with the EIDL loan, $10,000 advance within 3 days of applying. Well, guess what? And you see that word there that says discretionary. Now you know why we put that word there. Because I've got a lot of people that are on 10 to 14 days and have not heard anything. Now, the way that we were told it was going to work is they'll drop the 10 in your account, and then you'll get an email or a call from the SBA saying, okay, here's the rest of the details that we need from you for the application. And this is where you got to dig in. Okay, you said you lost 50,000. Let us know what your average monthly income was in 19, and let us know how much you made in 20 so far, and we're going to do the math and figure out the difference. And we might give you 50, we might not. The application was the first step, and then they're going to obviously do more. If your loan's rejected, you don't repay the 10K. And I just think that's an awesome thing if it does come to fruition. So we'll see. Again, a lot of this is, part of this is, okay, if you've had to provide sick leave, if you had to meet, now you can come in on the back end. You don't have to apply for the PPA. You can apply through the EIDL for the payroll to retain employees, but the EIDL is not forgiven. That's why we tell people that want to keep their employees going to do the PPA. Meet increased material costs, make rent or mortgage payments, and repaying obligations that can't be met due to revenue losses. The PP, if you do, we call it the PPP. It's actually the Payroll Protection Act loan forgiveness. You could legitimately get both loans and get the PP forgiven. But let's say that you pick up 10 grand through the IDL. They're going to make a mathematical adjustment because they're not going to forgive the 10 grand of grant money that you've already got. So again, these two programs, they want to make sure you're not going to double dip. Okay, next slide. Those are the stimulus parts of the of what's going on with the government. These next couple slides, I mean, we can opt out. I like this one though, because you can get money from your qualified retirement plan right now. It's not IRAs, it's mostly qualified plans. You can get 100,000 or 100% of your fair market value out. You may need to amend your plan document. We found out that they've changed that now, where the Department of Labor is going to come in and say you don't have to amend plan documents. They're going to do this by proclamation. Also, if you have loan payments due before 12/31/20 on your 401k, those can be delayed for up to a year. The payback is still 5 years. However, if you take money out now under emergency purposes, they're supposed to change the rules so that you can defer payments in year 1 and call it a 6-year payback. The nice thing about it is loans and withdrawals are treated differently. So you can take out a withdrawal and you can take out a loan. You can do both. All right, let's kick over to the next slide. RMDs, most of you guys already know there's no RMDs for 2020. You can treat your RMD as part of that $100,000 distribution that was on the previous slide as limits go, but you've got to let your custodian know. These are things that would help people get money out of the retirement plans if they need them. A lot of people already know this. We have still people coming and calling me out. A guy called me yesterday. Do I have to make my IRA payment by April 15th? No. And then the next one should be tax deadlines, I think. We still get people calling us on this. What are we doing? Do we get till July 15th? Yes. However, if you've extended your return, they're only going to give you through October 15th. I had one guy call me and say, hey, my return's due July 15th. So if we get another 6 months, I could push this out till January of 2021. No, they're not going to do that. Okay, next one. Net operating losses we can talk about later, and the rest of these are tax related slides. So if you want, we can go to actually fielding questions. But these are, and we like this rule because we use NOLs a lot for clients, but before they, in 18, they said you can't carry back NOLs anymore, and not operating losses. Well, they changed the rules because of this. But saying, all right, we're gonna let you go back and carry backs. So that's something that we're pleased to see that because of all this change in COVID that they're going to allow us to do.
Awesome. Well, that has been very helpful. I know that's a lot of material to try to kick out in a short period of time. We do have a large number of questions. I think we stick with the format, AJ, if it's okay with you, that we will capture those questions and then send a release out to everybody following the call. We can probably have that pretty early this afternoon.
Absolutely. And if we don't have the answers, we'll dig them up. We'll tell you we don't have them, but we'll research it. And yeah, we'll do the best we can for you.
Yeah.
Well, this last slide that you've got up here, net operating losses that you utilize a lot with your clients, kind of opens the door to our next subject, which is how to create tax reduction plans for small business without violating the letter or the spirit of the law. And Tony, you and Brad and Matthew have done a significant number of these over the last few years. First, I'd like to talk to Brad because it's the shortest version of this. Brad, you just did a tax reduction plan for a client. Without going into the detail of it, because I don't want to give away Tony's intellectual property, but sure. What kind of annual deductions was Tony and the tax planning pro able to create for these people, and they stand behind it by giving them audit support and actually filing the tax return too. So what actually happened?
Yeah, I had a referral that came in from another client, and they know these folks pretty well and said, hey, they're looking to pick up some term insurance. So I got in touch with them, and in typical format, like what we talk about at the Center for Tax Strategies, I did kind of a discovery call with them. Found out that they owned a couple of businesses, not huge money. We're talking about good money, $370, $380 a year. She was a teacher. He's an airline mechanic. They own some rental properties. So nothing, crazy complicated. Said, well, look, let's do this. Let's figure out exactly where you're at. Make sure you're not overpaying any unnecessary or paying any unnecessary taxes. What I suggest we do is I've got a firm that I can send your 2 years of returns to. In fact, I'll have you uplink that securely to them. They will review your corporate and personal and come back with an analysis. If there's some savings in there, great. We'll talk about how we could deploy those dollars more effectively. If there's no significant savings, you'll know that your CPA is doing a good job being proactive. So we sent them up, went to Tony. Tony came back with an executive summary along with Matt. So Matt, go ahead and jump in whenever you want here on the video. We ended up with the $34,000 tax savings per year. Take that over a 10-year period, we're looking at $340,000. Now, what that did with this client in particular is identified money that they did not know they had. We found efficiencies in their current planning protocol. Those efficiencies then turned into a $60,000 target versus a $10,000 or $5,000 term policy. So they're very, very happy. They're getting their returns filed. They couldn't be happier. And again, it started out with what would have been probably a $1,600 term sale if the discovery and the protocol wasn't in place.
Yeah, this has become such an attractive methodology, because especially with the pandemic that's going on right now, people don't want to talk about spending money. People want to talk about figuring out ways to save money, pay their bills. Everybody that I know wants to figure out if there's legal, moral, and ethical ways to save money on taxes. And this is a specialty within the accounting community. Most accountants basically know the rules, but they are generalists. It's like going to a general practitioner physician when in reality you need an orthopedic surgeon that specializes in hands and specializes in the ring finger of your right hand. There are specialties within specialties within specialties, and that's what the tax planning pros actually do. Is they go in, review what's being done, review the financials, review the tax return, charge a fee. I think the fee was how much, Brad? Was it $8,000?
Yeah, 8,900, something like that, against 340 grand.
I think you mean 9,000, yes?
Yeah, 8,900. I've got to tell you something you don't know that's really funny, because it came up today. I didn't get a chance to talk to everybody on the phone before the call, but the client called me up. She said, I've got a question for you. Can you do that tax savings for anybody? And I said, why do you ask? Well, I've got a friend and I know they're not happy with their current preparer, and would you be willing, is there any way that we can maybe refer them? Now, I'm going to tell you something. I've been in insurance primarily for all of my adult life, 35, 36 years. I have received referrals from clients. I've never received referrals that quickly and that easily, because it's a lot easier, obviously, to refer a savings than it would be the greatest life insurance agent they ever met. So I just want to tip the hat to you guys for designing that, because it created something I've never seen before.
Yeah, and I'm going to ask Tony a question. Tony, when you get people's tax returns, are you, if it's a small business, are you always able to save people taxes?
No. We've had some that we've had to go back and say, you know what, based upon the fact that you're a conservative individual and your accountant has done a good job, we think you're right where you should be and you're good where you're at. The funny thing about that, we did have that happen last year, and the client said, you mean you're not going to try to sell me anything? Oh, you're good. He said, seriously? I said, yeah. A week later, he refers me to clients because I was honest with them.
Well, and so I'm assuming in that situation that there was there was no fee because there was no savings. Is that correct?
Correct. That's correct.
Tony, I gotta say something. Let me jump in one more time here. You know, the client didn't write a check to get that analysis done. So the risk, I didn't feel I had a lot of risk on my behalf, nor did they. I mean, if you came back with a number and said they've got great proactive advice from their current CPA and the savings was 1,000, you'd probably tell me what to tell them to increase the 1,000, but we're not looking at a fee. But what I wanted to point out that I thought was so important is the advice that you gave back in the analysis on the executive summary that I received before the client received it, before I talked to the client about it. There was nothing sexy. We're not talking about setting up a captive. I mean, there's nothing wrong with a captive under right conditions, but using that as an example, this was block and tackle stuff, and I can share it without getting into details. They weren't properly running their automobiles through their corporations. They didn't have their child care credit in place properly. They had a wrong corporate structure on both of their sub companies that they had. They were missing depreciation on their 4 rental properties. It was nothing that I wouldn't very comfortably tell the client you ought to be doing. And that to me was magic.
Correct. We try to stick with the basics.
Yeah, I'm going to talk to Matthew in a second, but we've been so excited about this that it's now become one of the premier offerings of the Center for Tax Strategies and Resources, because the issue of who do I go see next? You know, where do I make next month's mortgage payment? Has it been an issue that's been in the insurance and financial services industry? I've been in this for a half a century, for every single minute of that time. And if you go to a party and you want to talk to somebody and you want to talk to them about the fact that you're a fantastic financial planner, or you do great work with assets under management or insurance or asset protection or pension planning, I can tell you the reception is not the same as if you say, we want to talk to you about saving money on your taxes. Matthew, you've been doing this now for how many years?
Since 2004.
Since 2004. And
Yep.
You charge fees for this is Matt Pearson, I apologize. And you're charging fees to take things to people that can help them save their money on taxes, yes?
That is correct.
And you also do Social Security and retirement seminars for older people as well, okay? And you've got a very unique methodology and a very high level of expertise on getting people into the room. What are most of them interested in? Are most of them interested in retirement, or most of them interested in reducing their taxes? And oh, by the way, if I can do that, I can fund for retirement.
Well, that's a great question. So we do help operate one of the largest annuity funnels in the country. Most people would recognize the name of the organization that we do. We've established a digital marketing program for them. They do really, really well. But one of the things we've noticed, it costs quite a bit to get people interested in talking about annuities or life insurance. However, there's such a need and such a desire that we can get people talking about taxes and retirement much, much quicker. So in order to fill a seminar to talk to somebody about, say, annuities, it might cost us, $70, $80 to get somebody to go to a first appointment. Whereas on the tax strategy stuff, especially on retirement, or if you're doing it for a business owner, we're getting people into seminars or into webinars at a much, much lesser cost. It's taxes are I call it tax bait. That's what gets people into the door, and I think Brad started to recognize real quick. People are really, really quick and interested in talking about tax savings, where if you start talking to them about life insurance, nobody's really knocking down your door to talk about life insurance. But I've been more busy because business owners have had more time. I thought it was kind of funny you guys were opening up with talking about, you guys got all this free time. I've been running 12 and 16-hour days because we're a nationwide operation, and right now we got about 30% of our conversations coming out of California. People are interested in what this stimulus package is going to do to businesses on the taxes and in their retirement. So people are very, very proactive right now, and they have their time to start thinking, how's this going to impact me as a business when this $28 trillion deficit is going to have to be paid for?
So how many tax reduction plans would you approximate that you did last year?
Tony and I did north of about 180. Over the past 5 years, we've done well over 1,000.
And the average fee that you're charging is what?
I always tell people the average fee is about 10,000 because that's sort of where we started, anywhere between 8 and 12,000. But I would say in the last year, and Tony, you could tell me if I'm off on this, but we're probably, our average fees are up around $16,000, $17,000.
Yeah, that'd be great.
And I'm assuming that not all of those came with the sale of a product or a service, but maybe half of them, 75%.
Well, let me give you just a sample. I have 4 advisors in my office that do run, Social Security, taxes, and retirement seminars. One of them ran into a business owner that was selling their business. He says, "Hey, before I meet you, I think you ought to talk to this guy we partner with when it comes to tax strategies." They came in, they sit down in my office, and I said, "Well, how can I help you?" And they said, "We're looking for a financial advisor that can help us invest $3.5 million. I'm like, "That's great. You guys have done very, very well. How did you accumulate this $3.5 million?" And they said, "We haven't yet. We're going to sell our business for $3.5 million." And we started talking about the taxes. And at the end, to basically jump to the end of the line here, they weren't able to sell their business for $3.5 million, but we were able to reduce their taxes on the sale of that business by over $500,000. And they chose that financial advisor to go with him because the other 4 financial advisors they met with, when they said, "We haven't got it yet, we're going to sell our business," everybody else says, "Call us when you sell the business." This advisor was smart enough to know that, hey, I want to be first in line when that money comes available. You need to talk to Tax Strategy Pro. And so he ended up with just a little less than $3 million for, and most of it went to assets under management or promise-based products.
And so I'm assuming that your relationship with the Center for Tax Strategies and Resources had something to do with those pieces, not everything, but something to do with those pieces, the language, the strategy, et cetera, et cetera. All right.
Absolutely. I think I shared at our last conference, one of the things that I think has been the most beneficial in opening up my business to the point where it is today is I joined the Center for Tax Strategy and Resources it's almost a year now. And the one-on-one conversations with Brad and Simon, just on the discovery method alone, has started to open the doors to being able to increase the amount of income that the advisors are making on the back end of the plans.
Well, and look, we're not the answer to everything, which is why we added resources to our name. I mean, something like Tax Strategies Pro is a resource. Something like the national organization we're building I think it's starting with 30 CPAs around the country, all that want to do proactive, not retroactive tax planning. And that creates opportunity. And they're going to have to go through some training because there's certainly a difference of cultures with regard to, quote, salespeople and tax professionals. But it is, at least at the beginning, it's looking like a very, very exciting methodology and combination of abilities. Tony, you've been doing proactive tax planning for how long now? I know you were one of the first. You sit on the board of a couple of proactive tax planning groups. How long have you been doing it?
It's been about 15 years.
And did it change the way you conduct your practice?
Absolutely. We've basically taken a 360-degree turn with how we operate and how we deal with clients, and it's broadened our scope. I mean, we're in all 51 states, where before we were in our little 3-county area. So yeah, it's opened up the world for us, basically. I mean, we're able to go in and help people. For example, 2 weeks ago, a doctor in Los Angeles that we went in and helped, and referred by a friend of a friend of a friend. I mean, that's the way these things go. And he was just tickled that he had run into us. He had gotten advice from a few people here and a few people there, but we were able to basically really dig into a situation, get to know what he had going on, and make suggestions. And when he saw the savings, he was just beside himself.
And yet you're willing to work with the existing CPA, because almost every successful businessman is going to say, well, you know, I've got a good CPA, we're doing everything we can. How do you deal with that?
Well, you know, we basically, I chuckle because I'm thinking to myself, and I haven't verbalized it yet, if your CPA's done such a great job, what are you doing talking to me? You know, but the bottom line is, yeah, we will work with your CPA. You know, we'd be happy to include him into the mix. We're not looking to take his bookkeeping work and his payroll work. We don't want that. We want to do the tax planning, and if we can create a relationship where the pieces fit, you know, it's a win-win. We always tell clients, however, you know, you got to let us do your tax work for the first year, because we're guaranteeing a savings. You know, because we're charging you a fee, and if we hand it off, then we lose control over being able to make sure that we deliver what we promise. So one of the hard and fast rules,
you get paid.
right? One of the hard and fast rules is, you know, we do it the first year. What you guys do beyond that's up to you. We have no trouble working with those CPAs who have an interest in it, but it's like you said before. I tell my clients and my potential clients that, you know, the accounting and tax world is becoming just like the physician world. There's general practitioners and there's specialists. We've evolved into the role of a specialist. Do I want payroll? No. Do I want the bookkeeping? No. I would like to get into the high level, to look at your business and dissect it, and show you how to save a big bunch of money, because you're working your behind off to earn it. Why give it away to Uncle Sam? And
well,
so,
do you remember the chiropractor that we spoke to last week?
yes.
I mean, he was doing some things that are just not ethical, not moral, not legal, having to do with group benefits. He didn't understand how to eliminate taxes on simple things like qualified retirement plans, and yet even beyond that, you were saving him how much per year, if I remember correctly? Was it not? It was over 100,000, wasn't it?
Yeah, and a lot of it was, well, here's what we're going to do. We're going to go in and clean this up, and we're going to put things into place so that you're documented correctly and you can do this correctly. But we're already taking those deductions. Yeah, but if you get audited, guess what? They're coming back off the board. If you set it up right with the right agreements and posture your entities and set those up correctly, then you can do this the right way, not have to worry about fudging or cheating, and you can sleep at night. And so there's the difference between what we do and what, you know, some of the clients think we got this, and they don't understand that, you know, you got to have all your paperwork in order. You got to have all your ducks in line, because if you don't, and Uncle comes in to take a peek and they say, okay, where's your agreement at? And you say, what agreement? Okay, we're tossing those deductions because you've created a problem.
Yeah.
And it even goes further than that. You get a ticked off employee that decides to turn you in one of the agencies, then you got real problems. So we try to peel below the surface to make sure if we're giving you an idea, you have all the proper documentation and you have all the proper information in file, so that, you know, if Uncle comes calling, or if you get a disgruntled employee, you don't have worries about sleep at night.
Well, that's the big thing. I mean, this one of the particular things that we started with this doctor was that he was buying group medical for himself, but he wasn't including his other employees, and he thought that was okay. And I started out that conversation by saying to him, you should get off the phone right now, and you should go include your other employees, because if one of your employees or your ex-employees winds up in the hospital with COVID virus or a heart attack or something serious, you're going to lose this business with the amount of money that you're going to have to pay, because the Department of Labor is going to be all over you. And it had nothing at all to do with the rest of the tax saving. It just had to do with, you know, you think you're getting away with it because you haven't been caught yet. But the reality is you have a very substantial risk, not if you get caught by audit, but if you get caught by an employee who says, you know, I don't have any insurance. And they're going to try to figure out a way to be able to find it. And one of the things that we do on our prospective tax planners is we say to them, do you have enough confidence in your existing advisor to get a second opinion? And that's, that's like saying, do you still beat your wife? The reality is yes, I have enough, or no, I don't have enough confidence. But one way or another, they may start out cynical, and they may walk out, continue to be cynical, but they don't have to pay money in order to get an overview as to what the potential tax savings would be. If they want the details, that they're going to have to pay for. But this is just, it is such an incredible way to be able to market, get paid to market, and get paid to provide value, get paid to effectively prospect and get referrals, and do whatever it is you do, whether it be assets under management or annuities or senior settlements or life insurance or pension plans. It doesn't matter. The reality is we need to start talking about what people want to talk about, not what we want to talk about.
And Simon, yeah, there is. It's kind of a natural transition. I mean, at the Center for Tax Strategies and Resources, which is our kind of like an education, it is an educational group. We have members that come in, pay dues. We obviously know that that leading with taxes is an amazing way to get in front of the right kind of prospects under favorable conditions. And one of the questions we like to lead with and talk to the members and do training around is when you ask a client what's their largest single expense, if they think about it, we know what the answer is. It's taxes.
Sure.
Now, to be able to talk about all the other strategies we do, which there are 25 or 30 consistent strategies that can reduce the taxes on a client's behalf, first step is reviewing what they have in front of them, what they've been doing for the last couple of years, and find out you are an absolute hero in that client's eyes if you come back with the savings. If you don't come back with the savings, you are an absolute hero in the prospect's eyes because you just delivered a service, gave them confidence in their existing advisor. And that CPA that I want to sit down with to review the strategies that I'm going to put in front of the client, I'm happy to tell them what a wonderful job they've been doing with the client. Let me show you what we're talking about, and let's figure out how we partner up with our mutual client. So it's just such an unbelievable fit from a prospecting perspective and for establishing a relationship with a new, or look at today. We're sitting around right now. I've actually had more video interviews that normally I would have jumped on an airplane for. And I was scratching my head, which, by the way, it's relatively easy to do, just like Matt, in saying, how am I going to create some opportunities that would generate revenue for me, solve problems for my clients? It was an easy phone call to get these people on the phone and talk about doing a review, especially this time of year, especially when they're bored. What a wonderful thing to do on a review for your clients. I mean, we're so excited about this, and all the time I've been in the business. I said to Simon the other day, I haven't seen anything this good in 15 years, because that's about as far back as I could remember the details. He said, I've never seen anything this good, period. So it's the tool that gets you in front under favorable conditions. This one's great.
I'd like to speak to that, Brad. So you brought up the chiropractor that we're speaking with there, Simon, with you. The advisor that introduced us to that chiropractor had pretty much extinguished everything. They might have been close to getting a life insurance policy, a small life insurance policy out of it, but instead, something that he thought was a dead relationship, he introduced us to them. He got a piece of the tax planning as far as a referral piece. And then on the back end, instead of the $15,000, $20,000 commission, he's looking at something more in the neighborhood of $150,000 commission. And he's got a chiropractor there now that is calling him about everything. Hey, do you know somebody that has this? Hey, we're thinking about buying this rental property. Because you become the person that they recognize. You have more resources available. And we maintain that relationship. So when that chiropractor calls back and he wants to know about the extra 3 pieces of rental properties he's getting ready to buy, he doesn't call us directly. He goes back through that advisor. The advisor sets up an appointment. So we like to maintain the relationship with the advisor as well. And then speaking specifically about Brad's situation with the couple that he was going to do a $1,600, I believe it was a $1,600 term policy.
No, that's not what they wanted. That's not what I was going to do.
Okay, and that's what they wanted?
Until we did a full discovery.
Right.
Actually, I don't think Brad is licensed to sell term insurance.
I don't think so.
But what I was going to say is, sometimes advisors, and I know we got a lot of advisors on the call, sometimes advisors are concerned about introducing them to somebody else. But in most cases, we're able to not only enhance your relationship with that individual, add value to them at no cost to you, give you an opportunity to gain more income. But then it turns around that you're probably going to make more money on the back end because their 1040 or their tax returns is telling us, here's what you need to do to be efficient. Oh, by the way, these are the products that you need to be working with, and Brad's going to be able to help you with that. So,
man, let me jump into that too, because it reminded me of something that I did a conversation last week. About a year ago, I met a couple very successful in the commercial P&C business. They don't do anything with life, though they are licensed. But they're very successful. They referred a couple of clients to me, including a car dealer that I did some personal planning for, plus key retention of his top employees. So, that nice sale, they made a percentage for the referral. I called them up about tax plans. The problem I always had with them is they loved what we do. They loved how I worked with their clients. They know I was going to make them look good. They know I wasn't going to go in there and pressure, right? But I could deliver results. It's still a really hard referral. So I got on the phone with them last week and said, look, here's an approach that may work really well for these business owners. The first thing we do is do a review of their current taxation to make sure that they're not paying unnecessary taxes. That starts the relationship, and then we see where it goes from there. Let's start with you. So they're gathering their information together. We're going to run it on their practice. So now they have practical application. What an unbelievable easy referral, especially once we show them how much money we save them in taxes. What an unbelievably easy referral for them to go to their clients with that same line. And I'm the one who ends up with the benefit, and they end up with
and Bradley, that's every client that we have or the members on this call have, going back to them and being able to explore additional value and additional service, get paid something on the engagement of reducing their taxes, and have the unique opportunity of being able to enhance and increase what you've already done with them. Every new prospect, every client that you've lost, every attendee that attends the seminar or webinar that you've done that didn't convert to an appointment. There's a whole potpourri of additional things that can be done right now while nobody else is able to do them. And let me just say one thing. The reason Brad's number and email address is up there and his phone number and the extension to schedule a call is because you cannot get to Anthony and to Matthew directly. It's got to go through a credible source, which fortunately for us, we think is us. They won't take your phone call, or if they do, they're just going to refer you back to Brad. So save yourself some time and at least explore how being able to add proactive tax planning. You don't have to be an expert. All you have to do is know how to talk about a few labels and bring the experts in. It's incredibly unique. Tony, you got anything else you want?
No, the only thing I can tell you is, it's worth adding to your existing practice. Over here, if you're familiar with Charlie and the Chocolate Factory, we call it the golden ticket because it just seems to be that way. But it's another for everyone out there in the financial planning community. It's another tool in your black bag, and it may be the tool right now that will get you further into the door and develop a deeper relationship with your client, because you can bring now additional things of value to them, things that they're going to want to talk about. Nobody likes to pay taxes. I have not had a client walk through our door yet that says, "Yeah, that's fine. We'll write that check, no problem." People
I pay more.
Yeah, people are very sensitive to this. This is an important issue that, especially with this pandemic going on, we look at this as, right now, a lot of my clients got a lot of time on their hands, so my phone's ringing off the hook. But, not only can we bring the tax reduction plans to the table, but we can also bring an additional, if you don't know about these stimulus plans, you ought to know about them, at least to be able to bring value to the table for your clients. Because If you do one EIDL app and a client gets a $10,000 grant, whether they qualify or not, do you think they won't call you the next time they got a question or concern about anything? And I think we all want to be that person to where our client calls us first, no matter what it's about.
Yeah.
You know, one of the critiques that we get in the financial planning business, and I try to avoid this if humanly possible, is the only time you call me is when you want to sell me something. And here's a unique opportunity to call them where you're really not gaining to sell them something. You've got a service and you've got some professionals that can help them reduce the tax liability, and it can start with the very next quarterly estimate. It doesn't have to be in April or October of 2021. It can start now, and that's very interesting. In any event,
If you need some help, well, if you need some help trying to figure out what to do with all those dollars you freed up for the client, the Center for Tax Strategies and Resources have some pretty decent ideas. We're not a
we've got some very high level attorneys that are part of our faculty, some very high level producers, some very high level CPAs. It really is a think tank, but that's not what this call is about. This call was about information and exposing you to some of the resources. If anybody's got any questions, because we've kept you now for almost an hour and a half, so you have to go back for your nap or your next meal. Right now I'm on a schedule of 7 meals a day. And it's
you got the COVID-20 going on. Hey,
yeah, I mean, I saw, well, I'm not going to go into that. In any event, we appreciate you taking the time. If you contact Brad via his 877 number or Brad at CTSR.com. And we're happy you took the time. We hope we made your day a little bit brighter anyway. And we'll get out of this. We'll get out of it together. Lemons out of lemonade, guys. Thanks for your time. Take care. Bye-bye.
Take care.